Thanks for joining us. This is something new for the Silicon Valley guys. We're just going to start popping up occasionally with some lunch breaks. We're going to keep doing our gear nights, which we'll probably have one later in the month. But Josh and I started talking the other day, and I said, you know what, Josh, let's have lunch. NAB's not happening. We don't know what else to do with ourselves. So, let's throw a Zoom, invite some friends. This is the normal SVV, Silicon Valley video drill, guys. It's real simple. Keep your camera off if you can. Keep yourself muted so we can have a good conversation. Ask your questions. This is supposed to be very interactive, and this one will be interactive because I'm not going to let Josh get away with anything here, and I don't think any of you should either. So we're going to, let's get the chat humming, and I may call on you and ask you to come on camera, but at least I'll be asking the questions. And let me start before we get right into this point. All right, Josh, listen, we started with the NAB conversation, right? And as people are sort of drifting in, let's ask, and I think, who is it? Paul Weiser may have, who's on here, may have asked this question on LinkedIn. What's the, and I thought it was clever. And Paul, if you didn't ask, you should have, but I'll give you credit for anyway. What is the one thing you're missing by not being Vegas this week?
Oh, for me?
For you, Josh, come on.
Well, I like to say, Marty, and I think you share the similar perspective, but the answer to every question that I want to hear is in the four walls of that convention center for, 3.5, 4 days out of a year. That's what I'm missing. That enthusiasm, it just injects to your veins to know that the answer to anything you want to know is out there. And the only other thing I would decorate that by is it's just, there's no replacement for meeting people you don't already know. Because if you're going to Vegas just to talk to people you know for 20 years about things you've agreed on for 10 years, then don't get on the plane, right? That's what I miss.
All right, well, that's good. You know what? Well, you know what? You got some strangers and some familiar faces here on this Zoom, right? Let's just dig right into it, because one of the things that I think we would have all been talking about this week in Vegas is this deal, number one, and what it really means. Not just, listen, we all have money envy. Come on, the numbers are like staggering, and we don't have to go there. That's been talked about. You, Jock, talked about it in your blog. People have been, trying to make sense out of the deal. That's not the point here. The point is, what does it mean for our business? What does it mean in terms of cloud and how it evaluates a company? What does it mean to SaaS business models? Well, let's talk of the bigger issues, right? And that's what I really want to drill into. And again, I'm encouraging everyone, on this to burn up the chat, ask some questions here. But Josh, let's, before you dig into, and we're not talking. This is not a death by PowerPoint meeting. This is going to be a conversation. All right. When you heard of the deal, when the deal hit the transom, right? 1.275 billion for a relative startup called Frame.io that's been around 7 years, started 7 years ago, brought in some talent like Michael Ciani later on. But what was your first impression before you dug into the numbers and looked under the hood of the deal? What was it, a holy cow? Was it, wow, I haven't heard a deal like this since maybe IBM and Aspera, maybe, or maybe if we knew what the real numbers were there. What was your first reaction?
I bet Adobe has a sticky zero on its calculator. That was my first reaction. It was the holy cow. However, that being said, I think on balance, it's good. I have some fun at maybe the expense of the parties involved, but my God, do I applaud what Frame.io accomplished. And I think maybe if I could be so bold to answer your first question, Marty, the takeaway, I think whether or not you're a customer or a supplier, is you need to move as fast as practical. And I understand there's some practicalities to the cloud and to the purchase models that are characterized by SaaS. And I say that for the customers as well. You look at all the shareholder value that's being created. And again, I understand there are reasonable objections and why we can't have 100% of workloads in the cloud in 2021, but that's the marching orders. And actually, I think that's largely consistent with what we've seen in the industry. So now getting back to the number, I don't want to be the person to tell the world there's no Santa Claus. But I have a really tough time seeing how you get to these types of numbers that we're seeing, and not just Frame.io. There are greater examples at work in the market right now.
All right, but we have, so the macro sense is you got a transitioning industry going to a distributed model, more remote production, cloud environment becoming the norm or the accepted norm, and some sort of SaaS business model becoming the preferred way that people with money seem to want to see businesses set up, right? So those are the macro. At the same time, you have traditional trade shows and marketing dollars going in different places. You have salespeople learning how to market differently. So we can't also take what just took place out of the environment we've been in the last 2 years of remote pandemic infused economy, right? So with that said, you know what? Why don't you pull out those deadly slides?
All right.
And get our eyeballs moving, and then we'll dig in some really hardcore questions. All right, Josh. But why don't you take it away?
Okay, and now keep me oriented here, Marty. Are you seeing a slide with headline figures of 48 billion in 3,000 companies? Is that?
I am seeing that IABM DC Global Market Valuation Report.
Okay, so I will only burden the audience with this much background because this is needed. Where is my perspective coming from? Well, it's coming from the toil of being involved with the authoring each year of the market sizing reference for the media technology space. So starts at the camera, ends before you start to get into the consumer electronics world. No TVs, no set-top boxes, and something that walks and talks like a professional media use case. So it doesn't necessarily have to be a broadcaster or a post house, but it looks like a media use case, live events, all that enfolded in. And the methodology is bottom up. So count what actually is sold and get rid of double counting. So things like storage are just plagued with double and triple counting. That approach will get you to a number that looks about like 50 billion globally US dollars each year. And roughly, I mean, just shocking amount of fragmentation, 3,000 companies. So take that, and again, reasonable parties can disagree, but I'm happy to talk to anyone, anywhere, anytime. But that's where we have to kind of anchor our discussions of what the economic pie looks like, technology side of the world. Right? So if I march through here, and let's hope I can, where I would like to just provoke maybe some of the audience. For my sins, historically, I was a banker before I became a research person. And it was always my observation that within about a 3-hour drive of the San Francisco International Airport, it was almost impossible to have a realistic business discussion about our world, the media technology sector, because everybody was off with these rhetorical flourishes about video being this powerful communication medium, can engage. That's great. But let's have a fact-based conversation. How big is that market? What do the sales channels look like? Can we really engage? And to the detriment of a lot of the big technology companies in our world, they would get interested in our space, maybe on a rolling 5-year basis, and just get fleeced with either paying prices for companies where it was never going to make sense for them to participate in that economics, or building up their own internal divisions. And they can wipe away those mistakes, and it's not even a blip, right? They can just do that. But they could save themselves so much heartache and angst by just having conversations with a couple of people that are in the day-to-day of the industry. I say that as the background, right? Now, this is the past. That's not to say that this is going to be true forever. Where I would really challenge the people that see almost euphoria on how big these markets can possibly be, because it's not to say that they're not without points, but I liken it to like this belief in the undiscovered country, right? So if you think of, you use the example of King Kong, the classic movie from the 30s, where they're coming out of the fog and there's Skull Island, right? And so it's this undiscovered continent, except in my example, the proponents would argue that that's full of people with very flush technology budgets that want to pay, that want to buy their solutions at inflated prices. So I would just I would counsel people, it's okay to believe in something, but believe in something that you can touch, that's real, that you can quantify. And again, we always want to be imaginative and optimistic, but there's room for that and for what I think at the same time. I won't hit too many more slides here, but just to give you a more specific example than going back to the 30s, right? If you look at two recent IPOs, and in the case of Vimeo, spinouts, Kaltura sized in that document its market size at 55 billion. How did they come up with that? Well, they went out and they did some sort of census of how many companies that fit into a vertical that they're addressing. And then they just multiplied by whatever they thought was an appropriate revenue rate annually to come up with their market size. Now that has some benefits, right? It's quick, it's easy to explain, but it also comes with lots and lots of blind spots that you shouldn't believe a word of it, right? No one should be convinced by that kind of rigor that's put into it. And for organizations that have $1 billion enterprise value, it's remarkable how like passe it is to talk about these things. In the case of Vimeo, they took it just to an art form. They just downloaded from Duns and Bradstreet, how many enterprises exist in the world, made the grand assumption they're all going to want to buy their solutions, and did some doing this.
Josh, hold off a second. We've lost your signal and your video has frozen.
Oh.
So I'm gonna turn your camera off and see if we can reestablish at least what's going on with your audio. Save you a little bandwidth. It's not letting me do that either. Marty, come on back in, will you please?
I'm here.
All right, Josh has frozen and has locked up in Zoom, so he's probably got to redo. I'm putting you in. His slide is still up.
All right, well, I welcome. Again, I'm not going to talk to Josh's comments. I'm wondering if anybody has any comments while we're waiting for Josh. Any thoughts? I see some friends out there. Anybody want to come on and say hi and add some conversation here with me? Because I think the important thing for all of us is our, and this is something I'm going to talk to Josh about in a moment when he's back, which is, hey, Josh, you know what? Maybe the scale that we've been looking at this has changed. Maybe it's sort of, maybe we're looking with a bit of an older perspective. Anybody have any thoughts on that themselves? Well, let's see if we can get Josh back in.
Just a general comment about what we consider professional video. Those types of capabilities are penetrating every walk of life, frankly. People don't read anymore, and video is becoming more of every enterprise, government, communications effort, no matter what it is. So from that point of view, I think it's somewhat difficult to actually understand what that real overall size of the video market is per se.
So in other words, the market has expanded so exponentially over the last few years that if we're trying to apply older models, we may be missing something here. And those who say that Adobe paid an astronomical number may be looking at a different type of math, huh? Is that what you're saying?
Yeah, I tend to look a lot at conversations these days about people talking about current super cycle or beginning of current of super cycle and what that might mean to sort of traditional market segmentation and way of understanding markets. The beginnings of the super cycles we are now experiences will massively change how video is used across the planet. What that means exactly, fully, who the hell knows? I know it's huge.
Am I back?
You are back.
All right. Maybe I cut it out. Maybe I'll cut it out with the slides. All right. Okay. I heard.
Back, Josh. To bring you back, you were at Skull Island, right?
I was at Skull Island? Okay, yes.
We just took us a better view of Skull Island, and we were basically, while you were disappearing, saying basically your math may be just totally old school, but we'll let you defend it, right? We'll let you defend it.
So again, as they say in college football, play anyone, anytime, anywhere. I understand there's these rhetorical flourishes where people say, oh, magazines will become videos. But again, we're not saying video as the platform is like irrelevant, isn't growing. Saying someone has to pay money for those solutions, right? So you have to show the counterparty in that budget that doesn't exist today that'll exist tomorrow. And okay, maybe certainly can't find it in the media space in aggregate. And you start saying, oh, but there's these other verticals. Okay, I agree with you there, but let's have a serious conversation about how big and quantified those verticals are. And we see people that are getting public and raising money that aren't doing that. But no one wants to have that conversation. I get it, right? Because you're the guy sitting around saying, hey, is it really that much better than a horse, the car? Like, I understand that's how you typically, cast people that make the points I make. But again, if it's obvious, it should be easy to explain, would be my broader point. Let me take your guidance, Marty. Do you want to poke at me, or do you want me to try to finish up on those slides?
Yeah, try to finish up. Listen, I'll always poke at you. Come on, that's
All right,
part of.
okay.
That's why I invited you. But go, just see if you can finish them up.
All right. Just a couple more. So, just to get now, do you see right now, Marty, a snapshot of Kaltura and Vimeo on a slide?
Yeah,
Yep.
I see it. We got it.
I do. Yep.
So if you look at, so these are two organizations that both got into the public markets this year. Kaltura through a traditional IPO, Vimeo through a spin out of IAC. And if you go through and look through their market sizing, they say in the case of Kaltura, 55 billion. So how did they come up with that number? Well, they got some sort of census count for the number of customers they believe exist, and they multiplied by what their average revenue looks like for a customer. Well, I would point out that doesn't withstand a lot of scrutiny. It's easy to explain though, and I get it. It arrives at a very high number. The same case with Vimeo, right? They took this almost to a science. They did effectively the same thing, just they did all organizations on Earth. And then, they didn't want any feedback because they don't want to have to put another number or another opinion in their actual document. But again, there's no scrutiny of this in times like we are today, where you just have euphoric equity markets. And I don't blame them, right? If no one's going to ask you serious questions about this, then it's not worth Vimeo or Kaltura's time to spend a lot of time sussing it out. But if you would allow me just to drift back into the title of the presentation, if you think about Adobe and Frame.io, if you look at what that valuation is, so neither Adobe nor Frame.io has put any specific financials out about the Frame.io business. They have given us just the headline number, which is a cash figure. But if you start to say, okay, that's almost more than $500,000 per operational day of Frame.io that they were around. Okay, 260 employees, so $5 million per employee. These are marvelous figures. So on one hand, wow, congrats Frame.io. On the other hand, hey, would love to understand a little bit more about how big the business is, what kind of growth profile you would envision for it, how big the market is they're going after. Where I would make, and maybe this one I won't spend a lot of time on, but just to show you just the real contrast there between money in, money out. I mean, my goodness, what a job that they just did. If I could get, because I do want to grant the other side of the argument some air room. So Adobe would suggest that the addressable market for their creative cloud solutions is on the order of, say, $30 billion. Now, where does that figure come up? They have gone through and figured out a number, I think that's on the order of, say, 40 million creative professionals would be the term that they would use. Now, there isn't a great investigation then, okay, how much of that really hits like a video use case where you would have any kind of meaningful budget? But that's not Adobe's never going to get around to doing this because it's a rather small part of what they're doing with Creative Cloud. Or maybe that will change with this acquisition. Where I would, though, if I were going to put their argument on the head of a pin, they would say, and I have permission to use this from the Frame.io team, that for every one editor on Frame.io's platform, there are 9 other stakeholders involved in that production process. So you think of, say you're doing an advertisement, maybe 5-10 years ago, you'd all get in an editing room and people would look over your shoulder and they'd say, oh no, cut the video there, crop it here. There are 9 people for every editor that they have on their system. So in other words, the problem they're solving has moved away from kind of the traditional source in the value chain. And now you're looking at all of this just business workflow that exists that's tied to video. So I would grant them that point. where they are that in this respect expanding the market and what that looks like. And in fact, their CEO makes this point on their most recent earnings call, because this deal hasn't closed yet. So they're being very careful about what they say. So I see that point. I would just, again, I'd love to see us have like a business-based discussion of how you kind of start to back into those figures, or how you would start to quantify it. Because I've never seen a great rendition of that. And most people don't have time for it. They just fall back on these rhetorical flourishes about, oh, it's such a powerful medium and look at it grow, and contrast it with 20 years ago. Those things have been true for 20 years. So why aren't we seeing that show up in auditable figures? But now I sound real curmudgeonly, Marty. But I would say, so I grant the following. I don't want to be the person that talks people out of investing lots of money in our industry. I'm welcoming of that. And goodness, is my voice in the minority? Because when you look at the money that's being raised in our space, the investors are believers. That Calturnum, that's pre-IPO, right? So they got a whole bunch more money after that. And of course, Frame.io, that's pre-Adobe putting $1 billion in. So there are believers everywhere. And again, it's one of these things. I hope I'm wrong. I hope it's a much bigger market than can be quantified. All right, so Marty, I hope that offers some fodder for discourse. Where would you like to take it?
I want to take it back a moment, because there's a couple of things that come up. Okay, so let's talk about a couple of the components of what's hot and why it's hot, and what it really means. Okay, and everybody all the analysts I've read or the articles I've read, they keep on going to that SaaS as being the sweet spot model right now. It's a sexy model for investors, right? That's, and I think even maybe it was in your blog at Devoncroft, Josh, or maybe it was another piece that I read, is if you're going to try to go to the bank right now in this business, you got to have to show that kind of business model. So explain that to me. What's so hot about that business model, and why is it such a hot trigger for investors at this point? Yeah,
great points. So I want to draw a contrast. I think it's best explained by drawing a contrast. So if you go back even say 10 years ago, and say you had a great idea for a technology that you wanted to bring to the masses of the next video application users, well, you would have had to build out a rather expensive and cumbersome physical channel. Either you're selling some shrink wrap software through like Fry Electronics or Walmart, that kind of stuff. It's a different universe than trying to walk into your local broadcaster. So, so you couldn't, as a practical matter, actually touch all those use cases that people like to talk about: hospitals, houses of worship. In a world of SaaS, where you have a proper single platform, and now you can do digital marketing. So in the case of Frame.io, 50% of their leads were coming outside of direct marketing, Facebook, YouTube. And you can start to build out and touch those channels, because what do you care if it's someone at a big broadcaster versus someone in their basement that's doing wedding videos? You should be indifferent. You can, through that SaaS platform, equally with as little friction, sign up both of those customers, and then have a growing relationship with them going forward. So we started talking about trade shows, Marty. Think about what that gets rid of. So you don't have to have these big one moment in time, try to put on a bigger kind of party than you put on last year, trade show in Vegas and Amsterdam. And, to the extent you're going to Vegas twice a year for CES, you can get out of that mold. Instead, you can shovel money into these digital marketing avenues that can have fairly lucrative returns when you start looking at it as the lifetime value of that customer that you're bringing onto your platform. So the investor looks at it and they say, wait a minute, I have locked in revenue. I have much more optimized sales and marketing spend for the revenue I'm getting. So I'm not going to put a traditional software multiple on this. I'm going to put a loftier multiple on this, because now the sky's the limit. I can touch the whole world. At least that would be the
sure. The other part of this is, we who live most of our lives in sports, and those of us who sort of for those who see the SVG up there in the Silicon Valley video, this has been an initiative we've been working on. Tom Baldessari is a good friend at B&H. They came in and supported us, and Dave Van Hoy and his team over at ASG, because they saw, there was an opportunity to sort of blend the both communities and the both worlds. But we've been living in the last couple of years now in an increasingly REMI environment, right? And and I've only accelerated as the word we tend to use these days with the pandemic. To what extent do you think this this Frame.io is one of the winners? There's winners and losers in this world of the pandemic economy, right? To what extent what accelerated over the last 18 months played into their strategy and played into their hands?
I mean, I hesitate to say it was a good development given everything that went wrong.
Hey, listen, Purell made money on the deal too. Come on.
Yes.
And so, and
you're
by
right.
the way, every cardboard manufacturer in the world. So,
but
they're winners
not
and losers in everything, right?
Yes, because even when shooting stopped, you still had things in post that had to get completed. And in fact, perhaps with a higher priority given just the voracious demand for some of the streaming services that were coming up. So yeah, it played absolutely into the trends that they were positioned for, but not just them, right? So you mentioned, say, sports. Look at the transactions we've now seen with anybody that had anything to do with enabling connectivity or maintaining connectivity. LiveView has transacted, Mobile Viewpoint has transacted. This has really played into and played up a lot of those organizations. However, I would say that there is a discussion to be had. How much of what took place over the last 2 years has just pulled forward from the future spend that would have otherwise taken place, and how much of it has just like fundamentally reshaped how we're going to do things going forward? It's an open question.
Yep. But there's no question that what happened, that, companies that were poised for this, it only accelerated the enthusiasm, let's say, in the markets for their products.
Absolutely.
And, and they're not necessarily facing the traditional supply chain issues that many of those other products are facing, right? That's a whole nother issue, right?
Yes. So no physical fulfillment in the case of Frame.io. In fact, you can very quickly sign up for an account. You can very quickly begin using it. There's at no point is there going to be any hardware fulfillment.
Yes, it's not lost in shipment. It's not being lost in shipment, is it?
No lost in shipment.
Yeah, interesting.
You probably, it's difficult to imagine outside of somebody that was making, prosumer cameras or microphones that was better positioned to take advantage of that disruption.
Yeah, interesting. So let's talk a little bit about the cultures, right? Is this a Hollywood deal, or is this a Silicon Valley deal, or is this, or those distinctions are over? Is this a deal of how would you characterize the cultural shift that's going on here, and how it reflects?
Yeah, I think this is a great question, right? Because you just don't see deals like this in our world. Somebody that was able to when they raised their series, when Frame.io raised their Series C round, I thought to myself, they're never going to find a home for that money. It's an overcapitalized business. There's no exit here for that type of fund. Wildly wrong, right? There's no parallel for this type of deal where you went out and you've got just top tier VCs involved, amazing top line exit. You just don't typically see this. Now, so what does that mean? Does that mean that we're now at a kind of a top of the cycle where many more, say, technology businesses that have a broader remit than just media are going to start to become more interested in our space? That's an open question. I think what is unqualified good thing is just to get some investors to care about our world again. Because I'm sure you've probably talked to entrepreneurs yourself. It's very difficult for them to raise money when they're going after a use case that's viewed as just being, say, local broadcasters. And now to break out of that and to have a more expansive view and get more interest from investors, and maybe even from public market investors, if you look at where some businesses like Avid are now trading. So I think that part of it is an unqualified good thing, just to get investor interest back in our world.
Well, listen, the chat, just a reminder, I'll keep talking, and Josh and I'll keep talking, so we can keep this conversation going. But I'm encouraging everybody out there to use the chat, share some questions, and let's hear some perspectives. But while I try to stir up that interaction in this Zoom environment, and by the way, we wouldn't have to do this. I wouldn't have to say this if we were sitting in a conference room at NAB, would I? The people would be yakking anyway. We'd be talking. But in the meantime, while we're waiting, Josh, what is this meaning? What is this meaning to what could this mean to other companies? all right, in the space. What
So
is it? What are you hearing out there? When this deal happened, that people say, "Hey, can you get me one of those deals? Get me one of those deals."
Well, I'm out of that business. I see one person online who's still in that
I
business.
see somebody just popped in. I see
Yeah,
all right.
yeah.
Hey, Ethan Jacks,
Yeah.
unmute yourself. Bring you into the conversation.
Hey
What do you
guys.
think? Hey, Ethan.
So number one, great to see everybody. Number two, this is kind of a bit of a comet of a deal, Josh. I think we would agree on that. What's the next comet, my friend?
I mean, it's very difficult to anticipate those things in advance because I wouldn't have believed that number was possible until I saw it. So maybe that's uncomfortable. I would say something when you look at, say, the money a Mux has now raised, pushing 200 million.
Yeah.
Going after, like, broadly speaking, compression and monitoring. That's the amount of money that you don't get a lot of patience with. So something will have to occur in that situation. But there are endless examples of things that are a little long in the private equity portfolios that will need to do something.
Exactly. I would say, guys, just leave this thought. And Marty, I think you made a good point to not focus on price, but query, if it were only 15 million, quote unquote, would we be having this meeting? Who knows, maybe. But what is, Josh, and we've talked about this, the pressure of the investors to get a good to great return. And does that create, call it a floor, and the buyer just has to rationalize their way into it?
But I mean, how would you ever make a good decision if that's the framework in which you looked at buying something? So
it's kind of it just becomes a binding constraint.
Yeah, okay, and I would say, so we do make the mistake sometimes of thinking about, so Adobe was making the decision to buy Frame.io. Ourselves in our own household expenditures, we are not a good comp for how Adobe would make a decision, right? So Adobe is generating $6 billion of cash a year. It has very laudable margins. It's trading at 20 times sales. So it has no problem finding access to money. Right. And in fact, it may be a greater motivation for them just to have additional growth avenues open to them. While I would caution those growth avenues aren't going to pay off in that price, but Adobe could reasonably say, hey, look at this gigantic Creative Cloud customer base we have, and now we can layer in something that's going to multiply our ability to charge for the product or to bring incremental. So they can probably rationalize a lot of those things. So it's not analogous to say, could they have gotten it for 20% less, or could they have offered 100? I mean, it's just a different universe of making a purchase decision.
Well, anyway, guys, thank you, and keep up.
Thanks for joining, Ethan. We have a question from Barry. Is it Barry Gotch, I think? Barry, you want to join in, or you want me to just read it for you? You're welcome to join. I'll read the question, and then...
I'll join in. Hi, everybody.
Barry. Hey, what's up, man?
Yeah, it's been a while, Barry.
Yeah, it has. And I miss seeing you in person, Josh. You're amazing. I always felt that they were positioning themselves for sale. I was just wondering why Apple didn't take them out in terms of building like a complete end-to-end ecosystem, where leveraging the iCloud storage they already have. To me, that's like a wasted opportunity that they had this iCloud infrastructure before anybody else really did. And why would Adobe pull the trigger and not Apple? That's really my question. Well,
and how I would answer your question, and I'm not in the mind of Apple, but I think it's reasonable to say Apple doesn't care, right? Like, think that's $1 trillion company, and I would argue if you summed up all of the categories that Frame.io addresses today and all its adjacency, you still wouldn't get to a number Apple would ever care about. So it's more remarkable to me that Adobe does care, and that goes, I think, to the earlier points I was talking about. You need to really talk yourself into this being a solution that can be deployed far and wide to ever affect what is a $20-25 billion annual revenue company there in Adobe. So I guess I would just switch your question around there, because granted, like if we were sitting in some of these giant companies thinking, hey, what would be the best way for them to play in our space? We can't lose sight of the fact that our level of economics are just not interesting to their level of economics. But fortunately, we can still have fun, right, Marty?
We can, but it's interesting. But in Barry's chat, though, Barry, you said Apple, but he also said Black Magic. That was, it was.
Well,
that was the other company that he mentions.
They need to get themselves in the public markets as soon as possible. They're still in the private markets, so they wouldn't have access to that type of capital. But they should get themselves in the public markets, and then they would. Yeah.
Interesting. But do you see, listen, the subtext, and I got to move out of the way. What did I say? What did we say? Big tech meets media tech, right? Let's talk about those two cultures. How are they so different? You started this conversation, Josh, on your end saying, hey, Marty, they're different worlds. What does this deal tell us about the different, I think that was the subtext in the descriptor. What does this tell about the different realities here, of the two cultures?
Well,
whether it's Apple, Adobe, Google, Facebook, I don't care who it is.
It's very interesting, right? Because I think what you're walking towards there is that they are colliding, right? I would grant this. I know this. It might sound like I'm now reversing my position, but I recognize that the historical case of audio and video is colliding with newer use cases of audio and video, and there's opportunities for the same technology to bridge those gaps. Where I would say, though, is the economics of Silicon Valley and the habits of Silicon Valley and how they value things, what type of opportunities they need to go after to feed the machine are just in a different universe than where you can make a really good living in our world. Just showing up at NAB with a modest booth and providing a product people need. So that collision, and I know I kind of made a reference at it, but just think to yourselves, there's probably some people here that have seen just the journey of Verizon in our world over the last 10 years, digital media services. I mean, how much money did they put into that exercise and sweat and effectively just kind of kicked it out the door with Yahoo at the end of it? So you think of the amount of money that organizations in our world have lit on fire, like Intel and IBM. It just light it on fire when they come into our world. Why is that? Because they need very, very big markets to feed the beast. They can't get tied down in markets that have this level of specialization and require this much of handholding to the customers. Anyway, there's a place for them to play in our world, but typically it's much lower in the application stack. I hope I fully answered that question, Marty, but maybe I did.
You never fully answer any question.
Right.
I can keep the questions going, but also there's another side to this equation. We're talking about the Apples, the Adobes, the big tech companies. Let's talk about the relatively small, but in perspective, the big dogs in our traditional media space. What does this mean to the Avids? What does this mean? Does a deal like this mean to a Grass Valley? How does it change their perceived value as companies, their business strategies? They must be, it's one thing for a startup to look at these numbers and go, holy wow. It's another thing for an Avid to look at this from their perspective. So take me from that side of the discussion.
So interesting. I think I would rob from what you said earlier. I think it accelerates what a lot of these companies were already setting off to do. And maybe it's just the final nail that gets them out of any kind of sort of traditional or heritage thinking about the appropriate way to go about addressing the needs of customers in the media vertical. You have to get to cloud and to SaaS type revenue models as fast as possible, even if you have to take a meaningful step back in your operating profile. That's a point of pride, right? For people to say, oh, we're growing, we're always growing. Even if you have to take a step back, because what the market, what this deal, what the general environment is telling us is that new type of revenue is just worth that much more than the old type of revenue. And I know, it's funny to say those things out loud, but if you're an investor in Avid, and they've already had that run up. Avid's almost back to 2 billion. That hasn't happened since Ethan was there, right? It's been a real long journey back for Avid. And Grass Valley, that Grass Valley deal, out of Belden, that was lunch money. So why would you do anything you were doing? Scrap it all. We got to get the SaaS. We got to get the cloud. Those are the answers. Now ask the questions.
So it's a good time to be selling AWS and Azure and Google Cloud to this business these days, huh?
We've never seen a business like that. In fact, Marty, I would challenge you. I've never seen a business better than cloud. It's very easily understood value proposition. AWS is now approaching $50 billion, north of 20% operating margins, those types of growth rates. I've never seen anything like it. So, and again, I could go on and on, but I would also say, just so this isn't lost, I would make the same arguments. I would change some of the specifics. I would make the same arguments for the customers. So if you're someone that's got to refresh a studio and you're sitting there saying, hey, does it make sense? Does it not make sense? No. You want to be in the same place that we're seeing this general environment to, as much as you can push into virtual environments and as much as you can push into OpEx business models.
But it also, to me, looks like it would be a nice bellwether for talent. In other words, you know what? I'm pretty smart. I know how to make stuff. I play around with video. I'm coding all day. I got a little shop here. You know what? I've been playing around with this. Is something I should double down on, this media business, because you know what? There is the payoff here, and there is the golden ring. So for a magnet for investment, for talent, this is I personally think this is a really exciting deal. To push to shine a little bit more of a sexy spotlight, what traditionally has been looked like an old school, pocket protector, slide rule industry.
Oh, you're absolutely right. And in fact, if there was no other reason to do it, what you just said would be a reason to do it, right? Just for talent. You look, say you were going to show up at whatever engineering school of choice and you wanted to recruit as a broadcaster. And you say, oh, you come to work for us. You get to work on some 10-year-old cameras and some technology from 20 years ago, and you get to use tapes. And I mean, there's no pitch there, right? And now you can say, hey, you come be a part of these dynamic environments, learn skills that have broader application than just being pigeonholed in broadcast. I mean, to me, that is lost on, and you can even see this. So some people that have made the tradition, like a Discover or an A&E, just the satisfaction scores coming out of their rank and file are through the charts versus what they historically had to deal with.
Interesting. All right. Well, listen, you know what? We're going to, unless I start seeing this chat light up a little bit right now, I think we're going to just sort of wrap on a couple other things.
There is a question about Black Magic going public. Any way they want would be my response to Michael. They have that luxury. That is a lovely business. And we were talking earlier about people that benefited from the disruption. Goodness.
Well, listen, since we have a few minutes, let's dish on those other companies. Traditionally we would, this is sort of the way I'd like to wrap it, bring this home, because again, we would be on I looked at my calendar this morning. I was doing a flight this morning. I think a lot of us were doing flights. You would be walking around the floor and you'd be looking at companies right now, and you'd be talking to people. What companies do you think you'd be looking at with this deal in the back of your mind? What other companies?
Hey Josh, I'm going to rudely interrupt and do a name check here. And you may have heard of these guys, and I've helped them get off the ground. And that's a company called Color Labs, which is going to use AI for color correction and related tasks. It's going to be a big deal. Mark Peterson and Dado Valentic are behind it. So just remember that name, Color Labs.
All right, Ethan. So and it was a deal you guys made over there, Media Bridge?
It's in the financing process now, Marty. So you'll be hearing more about it in the next month or so.
So tell us a little bit more. Tell us a little bit about the company. Give us a little bit.
It's a two-man shop. Mark Peterson, who many of you know, and Dado Valentic, who's one of the leading colorists in the world. And they finally kind of put their brains and ideas together to put together a team of developers to genuinely change how the color correction process at the high end. They're focused on the high end. So this is a big leap forward, not quite Frame IO level, but not trivial. And we're going to be going out for financing soon. So it's just a name worth paying attention to.
Good luck with it.
Thank you.
Josh, any other companies we should keep an eye? We should have been keeping an eye out for NAB if we were there.
Can I give you a general observation? I think it's starting to get its way, or it's starting to get into the industry consciousness to talk about data and how data can be used to make decisions, better business decisions. That to me, that's where the next eye-popping results going to happen in our world. And to me, it's a little confounding. There isn't more companies trying to grab that thought leadership. And so let me give you a specific example of, you may recall this, Marty. I think it was 2 or 3 years ago, we did a survey together of the attendees that were coming to the Chairman's Forum in Las Vegas. And I had a question sort of there that said, for those people in the truck, what is the one non-cost metric that you are measuring to report on the success of that live production? And the answer came back rather nonsensically, that viewership, right? But when you think of it, like even just like sitting here pausing and thinking about it, but what can you really control around viewership in the truck? I think it's a dubious thing to link it to, because, you know, for example, right, when France is in the finals of the World Cup, TF1's viewership's through the roof. Is that because they're doing a great job on site, you know, producing the match, and Fox Sports is doing a lousy job, right? Or is it who's on the field and a lot of factors that are out of your control? But to start to see, especially I would say on the OTT side of our industry, where there's an increasing discipline to actually measure aspects of both the user experience, but also things that are a little deeper than that around the quality of service, and start to have that inform business decisions. I think there's a huge opportunity in our world, and maybe take it out of the distribution case. If you just said, okay, we have a workflow and we're measuring lots of stuff from it, how can we now go to non-engineers and say, hey, we need to make a really big investment. It's going to have this benefit, and it's in our interest to do it, so that those engineers are now in a position to argue for and to support greater levels of investment into their business. I just think these are things that are going to pay for themselves and are huge untapped opportunities. You're starting to see some people do it. So if you do want some names, I'll drop them, but I don't know if we want names. But to me, that's the next great opportunity in our world.
Got a category. We got a question from David Miller. I don't know, Dave, if you want to pop up on screen while I sort of read your question, if you want to join the conversation with Josh. But thanks for the question, David. David said, beyond bringing 1 million customers and other verticals, all right, beyond that, right?
Now let's fact check that though. The wording is not customers, it's 1 million users, right? So they have lots of non-paying users. The last data point we have on customers, so those paying, it was less than 2% of their user quotation. They haven't updated it since, you know, late 2019. So, and I would also point out 50%, and this is a figure coming from Adobe, 50% of Frame.io's customers are already Adobe customers. I'm not trying to be pedantic here, because I think it is a really
good point. All right, but then let me get to the second part of the question, and because I think that's aside, right?
Yeah.
Dave is asking the question: is this deal really a strategic deal helping Adobe with weaknesses in its workflow? Is that why this is such
I think that's a fair characterization. And, you know, but I mean, unfortunately, the way the world works right now, big technology companies are so scared of their regulators and getting sued that they say as little as possible. And that was also the case here with Frame.io. But what they have said is they're looking to expand their workflow outside of just the editor. So I think it's very consistent with what's been said publicly. And again, I think it's a very interesting match. I guess I still have trouble getting past the headline number to talk about the specifics. But I grant David that's the best explanation I've come across.
So that's the best. So it's basically this was a nice little patch for a problem they were suffering with.
But if I were to poke at that characterization, Marty, like, what's the problem, right? Because I mean, Adobe is making its money outside of our world, or just a tip of our world. Right? So now they really want to get into the production process. And this is rather specialized stuff, or you need to have a use case here for putting together a somewhat sophisticated piece of content that's going to require multiple parties to weigh in on it. That use case isn't billions of people. And okay, maybe there's people on this call that disagree with that. But today, if I point to how many people buy this stuff, it's not billions, but maybe that'll change.
So I do things backwards. I should have introduced you. Now I'm going to introduce who the hell, for those of you who don't know who you are, right? After, as we wrap it up, but I do that intentionally because, I'd like to put that in perspective. You're an analyst, an industry analyst specializes in media. Devoncroft is pretty much the big dog in that space. Maybe some people say they're really the only company that's really specializes in the traditional broadcast and media space. But there's no shortage of analysts doing that kind of work in the big tech space. Tell me, from the putting on your Devoncroft hat, how is the world you cover different than big tech, and how do you think it's going to influence the way you, as an analyst, and you're a principal analyst who's going to be doing your math and doing your analysis in the future?
Well, I say glibly, Marty, you got to take a couple zeros off of the figures usually. Our world versus big tech. And that it might sound like a casual point, but it matters, right? So there's only so many, if we were a much bigger industry, there'd be 10 people like me. But we're smaller. So I guess I'm the analyst you get, or vice versa. How I draw that relationship. Yeah, and I would say I don't think it's fundamentally different than how I suspect analysts are covering those other technologies. It's probably just fewer companies in their world. It's a really big tent at a trade show, as everyone on this call is well aware. And the depth of understanding you need to speak credibly. I know color grading was brought up recently. That versus something on the OTT side of the industry. I mean, it's just remarkable how diverse just the different functional categories are in our world. So maybe I have an extra beer or two than whatever my tech counterpart is in my daily life. Yeah.
Okay, good. All right. So, one other question, and then we're going to wrap this up from my standpoint. What are you working on now? You did this report on the Frame.io deal and Adobe. There was a great piece you did on Avid recently. What's the topic du jour that you and Joe and the team at Devoncroft are working on? What should we keep an eye out for?
Oh, so I think shades of what I've talked on here. So we have we were going to have our in-person event yesterday, based on
how did it go?
Yeah, exactly. So it's now been recast. So it's the beginning of next month, so November 2nd and 3rd. I'm really going a level deeper. For those that like to see numbers, I'm going to spend some more time on just trying to put some figures around where we're seeing valuation levels and how we have no analog in at least in my time in this industry to look back at. Just where things are being valued it's really something to take note of. And then I would also say I'd really love to spend some more time talking in where I think data can get us as an industry, because it's my view that now, just speaking media-wise, and in fact, even take sports organizations, I think they're radically underfunded in terms of their technology infrastructure, Marty, and their organizations. A lot of these groups need to double their employees. So, and actually, I don't even think that's that hot a take to have. But I think we can actually start to prove it now that we're moving into virtual environments, and we get all this great data that's coming out. And that can be used to quantify and have a different type of conversation with the finance groups, and to make them more part of the solution than the part of the problem they are today.
Well, that'd be great. So listen, thank you, Josh. Thanks for joining us for lunch. Hopefully everybody had a good sandwich. And just remember, this is an SVG initiative, Silicon Valley Video. We're really happy to be doing this. We've been building on this for about a year. We'll be continuing building on it. Expect to see us back sometime late this month, early next month, with a gear night, with lots of gear that you would have seen at NAB, but you'll be seeing via Zoom. So we'll be back again. Josh, we hope you can join us again. In the future, we'll keep an eye on what you're doing, and certainly keep the gang on this lunch, alert of what's going on. Again, we're sponsored by two companies. That's it. Well, three, if you include SVG, ASG out of Emeryville. The great integrators, some great friends are on there, and Tom Baldessari, who's here as well from B&H. They're the guys who really sort of got this going, and I thank them for their support. But I thank all of you for joining us for a short lunch break. It's been an hour. It's been Josh, you've been awesome, and I hope we didn't put you too much on the spot. Thanks for everybody who asked questions. And right now, you know what? stay tuned. We'll be back and you'll be seeing some announcements on our next event. But this was fun, and we'll probably be doing more. Thanks all.
Outstanding. Pleasure, Marty.
Everybody. Cheers.